Trading performance is really an inside job. Success in trading comes from making good decisions at the right times. Good decisions at the right times come from a well-trained mind. Since 2005, John Locke has continuously trained his mind by studying extensively with titans in the coaching and neurolinguistic programming fields to gain some of the highest level of training and credentials available in those industries. This extensive training, coupled with his many years of being a professional trader and strategy developer, gives him an edge to help traders effectively train their minds and maximize the effectiveness of their trading strategies. Let's start right now to train your mind for ultimate trading success.
Hello, everyone. You are listening to the Locking Your Success Trading Performance podcast with Master Trading Performance Coach John Locke, where it's all about real traders, real problems, and real coaching. This episode is episode number 4, and today I'd like to talk about a question I received from one of our listeners. And this question helps bring out the importance of this month's subject of properly interpreting trading results and evaluating your trading decisions. So the question is, last month I had a trade that had got beaten up, had a point where I was past my maximum loss limits. I did not exit the trade, however. The thoughts that entered my mind were, if I'm at maximum loss in this trade, there's simply too much opportunity for me to get out now. Therefore, I stayed in, breaking from my plan. The market rebounded just enough for me to exit with a better result. And he's going on to state that hitting maximum loss in an M3C, which was the type of trade that he was trading, hitting maximum loss in that strategy implies that there is rich opportunity in that expiration cycle, since this scenario in itself is very rare. And he says, I wanted to share this with you since I broke my trading plan. Do you have any thoughts or tips or suggestions for me? Now, this is a great question. And there is certainly some really encouraging signs that we have within the question itself. So the thing that encourages me about this question is that the trader realizes he broke his plan. He realizes the thought and the feeling that led to breaking the plan. And even though he got a better result by breaking the plan, he also understands that this may lead to a problem down the road. And those are all awesome insights that a lot of traders don't have, they miss out on, and therefore misinterpret the lessons from the decisions that they're making. So let's dig in, and I'm going to start by saying it is extremely important for traders to have certain risk parameters in their trades, and they need those risk parameters in order to survive long-term in the market. Otherwise, luck is going to eventually run out, and that trader is going to blow up. Realize that risk limits are not about short-term profitability. Risk limits are about surviving. In other words, your risk parameters will sometimes knock you out of a trade that you might have won otherwise, meaning that you might ignore the risk limit and actually get a better result, sometimes a much better result in the short term doing so. Realize, however, that the limit is not in place to provide excellent short-term results. That limit is in place to prevent you from getting wiped out when luck happens to go against you, which it inevitably will at some point. And that makes this question a perfect example to bring out the importance of the topic of properly interpreting your results in our Trading Performance membership. And that's what we're discussing this month. Because consider this. We have a trader with a set of rules which includes risk limits. And this is great, right? We have a plan. So we're doing our trades, we're trading along, following our plan, and then certain events happen and we exceed a risk parameter. At that point, we have a decision to make. We can either get out, like we said we were going to do, or we can choose to ignore the rule and stay in. If we decide to ignore the rule and stay in, then obviously we get a result. If that result is a result that we get rewarded for, in other words, we get rewarded for the choice of breaking our plan, what happens is our unconscious mind automatically looks for and makes up evidence to support the thought that we made a good decision. And with this new evidence, it naturally becomes more confident about that decision. As a result, the next time you're in a similar situation, it's going to be much more natural and much easier for you to make the same decision again. this time with substantially more confidence that breaking the plan is the right thing to do and that it's going to provide a good result. And this is true even if we consciously acknowledge that we may not have done the right thing. And this is a problem because as you become more and more confident in your seemingly magical abilities to exceed your risk levels and win, you're going to start doing so with more and more risk until one day things don't work out your way and you're left with both financial and psychological damage. Damage to the point where it's unlikely you'll be able to trade effectively, or unlikely you'll be able to at least trade at the same size, or maybe you won't even be able to trade going forward at all. So my advice to you is that when you tell yourself that you're going to honor a certain risk parameter, then to always honor that risk parameter regardless of how you feel and regardless of what you think at the moment. Realize that the result of this specific trade is insignificant when you compare it to the long-term damage that can be done going down the path of overriding your rules, and more importantly, overriding the commitments you've already made to yourself. Now, in regard to the thought specifically, if I'm at max loss in this trade, there's too much opportunity for me to get out now. In regard to that thought, that's a very common thought, and I've seen that thought bankrupt people. Because if you extend that thought out, the thought is essentially saying the worse it gets, the more opportunity I have. Therefore, I'm going to risk more money. If that happens and it gets worse, you still have the thought, the worse it gets, the more opportunity I have, I risk more money. If it gets worse, you still have the thought, the worse it gets, the more opportunity I have, I risk more money. How bad are you going to let it get before you exit? Where is that exit point? Is it when you lose so much money that you're psychologically crippled and you're not able to trade anymore? Is it when it gets so bad that you're bankrupt? That's what the risk parameter is there for in the first place, so that we avoid getting anywhere near those points. Now that said, it may indeed be true that our trade is at a risk limit. And when it's at a risk limit, there may also be tremendous opportunity in getting back in and trading the market. Right? We can acknowledge that for a moment. But if this is the case, understand that you should have considered this prior to your initial entry, and this situation should have been planned for. As professional traders, whenever we're considering entering a position, we should always visualize all conceivable situations that might happen, and then decide ahead of time how we might want to handle those situations. So in this case, as a trader was considering an entry, a prepared trader should have thought something like, I'm going to enter here, and I'm entering it because I expect to win the trade. I think the probabilities are in my favor. However, I'm also aware that this trade may lose. I also realize that I have this belief that runs around inside my head from time to time that when this particular strategy loses, then that means there's just simply too much opportunity in the market to get out. Because if I have that thought pattern going on, then there's no way I'm going to follow that plan going into the future, because those are my thoughts. So if that's the case, and that's what I believe, and I know that ahead of time, I should sort that out. I should sort out what's going to happen when that goes through prior to entry. So for example, if I allow a loss normally of $10,000 in a particular trading strategy for any 1 month period, and that's my loss limit, $10,000, and I believe that if the trade reaches the percentage loss that would cause $10,000, if that happens, then there's opportunity for another trade there, and I decide that I'm going to want to take advantage of that opportunity, then I should plan for that. So maybe instead of entering with a trade with a $10,000 loss limit at that point, maybe I'll enter a smaller trade. Maybe I'll enter it with a $5,000 loss limit instead of $10,000. And then I'll plan on increasing size if it gets drawn down $5,000, while at the same time still honoring my total $10,000 limit. Maybe I'll hold off on entry till I see more opportunity in the market before risking my money. Or perhaps I'll simply acknowledge that yes, if this strategy gets down $10,000, I know I'm going to feel the urge to stay in, but I'm making the commitment to myself now that I will exit the trade anyway. Because we're all capable of doing that, right? We're all capable of acknowledging that we're going to have a feeling if certain things happen, and then deciding ahead of time to override our primitive desires to stay in. That's what makes us human. Now, if for some reason you're having challenges honoring your risk parameters, even when you do that, then that's probably because in the past you've rewarded yourself for violating those parameters. So what we need to do is we need to make sure the next time this happens that there is absolutely no reward in doing so. We want to send the message to our unconscious mind that this is simply unacceptable and this will not happen, and if this happens, it will result in pain every single time it is done. If you do that, you'll stop doing it. So what I want you to do is decide ahead of time some sort of task or something that's going to be extremely unpleasant for you in the event you do not honor your commitment. You can do things like choose to give twice the money you would have lost to charity, a charity that you don't like. Or you could offer to do a task, like clean the men's room at McDonald's for a week. And then you have someone you trust who will hold you accountable for doing that task if you break your plan. In other words, you want to make the consequences for not following your plan substantially worse than losing the trade. Just in case you actually break your plan and win money, make sure that there is no reward for you in that. You want to make sure you train yourself that breaking the plan leads to pain. There is no benefit in that. And then in the contrast, you also want to make sure that if you do follow your plan and you happen to lose, that you take that loss appropriately and you reward yourself for following your plan. This is how we train ourselves to follow or do what we say we are going to do. Now that said, I'd also like to acknowledge that just because you broke a trading plan doesn't necessarily mean that you made a poor probability decision. So, in the case of what happened here, somebody got down a maximum loss, they broke their plan, they stayed in the trade, and at that point, there may have actually been a very high probability of this working out for that person. So we should acknowledge that. We should acknowledge that your thought may have been a valid thought. But even though the probabilities were in your favor, this is still no excuse to take on irresponsible risk. However, it may be a reason to consider updating your plan. So if you have a plan that you're following and you find that you have certain beliefs that prevent you from following that plan, what you need to do is test those beliefs. I encourage you to create an alternative plan or wrapped around your beliefs about the market and then test the hell out of that plan to see if in the long term it's actually a good strategy, or if perhaps that new plan has some very unintended consequences that you weren't even expecting. And as you test your plan, as you're testing it, be sure to test it properly. Make sure you consider the consequences of alternative outcomes. You see, what happens is a lot of people, they back test something and they time it to the market. They tweak the rules so that they form fit what we call the luck of the past. And when you do that, you cannot expect the same results going up into the future. So what you want to do whenever you're doing testing is you want to make sure you are aware of all the alternative outcomes that may have happened if things happened a little bit differently. So for example, in a specific case, you may have taken a certain amount of risk, and maybe it was irresponsible risk, and it may have happened to work out this time. So maybe the market was going down and you took on maybe more risk to the downside than you should have, and maybe the market reversed and the trade won. When that happens in backtesting or even live trading for that matter, you can't just simply assume that that's going to happen the same way at some point in the future. What if the same thing happened and you did the same thing, you took the same action, and instead of the market reversing and going up, what if it gapped down 60 points the wrong way the next day? And the result was you drew down 3 times your loss limit. What if that happened? You have to take that and consider that into your results because that is a possibility, right? It certainly could have happened. And it's definitely possible in the future that if you come across a similar situation that something different might happen than what happened in the past. So imagine that happening, and then imagine that happening in the future when you're trading at your maximum size, the size you'd like to trade with, where if you traded that size, you'd be able to achieve your goals. What are the consequences to your account when the market does the opposite thing? What are the consequences to the long-term results of your strategy? What are the consequences to you psychologically? Consider all these things and then decide, were the decisions I made that happened to win this trade or created this winning backtest, were those decisions actually good decisions, or were they decisions that made me feel good in the short term but are ultimately going to lead to pain? I thank you for listening, and I look forward to seeing you on the next Trading Performance Podcast where you can take your trading to the next level. Hey, if you enjoyed listening to this podcast, you have to check out my Trading Performance membership, where we take all this material to the next level. We study it and we apply it to bring our trading performance to peak levels. Simply go to tradingperformancepodcast.com. That's one word, tradingperformancepodcast.com, to receive information on how you too can become involved and improve your trading. I look forward to seeing you there.